Perfect. Welcome out, everyone. Some of you are new. Some of you have been just taking a break, and some of you are watching at home for the intermediate session. Welcome to the Market Watch Group Trading Foundations working sessions. We're switching to more intermediate, although if you came for beginners, you're going to be just fine. I promise. We're going to go through the watch lists. That's a regular routine. We're going to start by finding a trade that looks tradable for a stock. That's regular. Then we may look at what the ops would be. So nothing here is like, oh, I should leave because this is advanced. No, 100% not. You should stay, participate. This will be very beneficial. My name is Scott. I'll be your host. It's approximately 8:50 p.m. Eastern. Here's the disclaimers. Keep in mind, as always, we're not brokers. We're not advisors. We don't give advice or recommendation. And this group and service is for education and illustrative purposes only. Let's go to the platform. So where were we? If you're just coming, we had a great discussion just on context, and it should hopefully give you a sense of how we're using context, right? We do the market posture, and that helps inform the day-to-day, but every day we're looking at the market to kind of be like, okay, where are we? Are we near some kind of a trade opportunity? And part of what we're doing in this group that I think sets it apart from a lot of other things is the continuity, right? It's not, hey, I'll see you next week, and then, we catch up. It's, okay, what are we doing tomorrow? What are we doing the next day? What are our considerations? It's Friday. What are we thinking about? It's the end of the week. What are we doing Sunday to get ready? What do we do Monday, right? And it should help you to feel like, okay, right? There's a lot going on. That's why we write it down. There's just a lot of moving parts. But can we do this in an hour a day? It's 5 to 7 hours a week? Yeah, absolutely. Can you figure out ways to even do it less than that? You can. I mean, a lot of people are here. Why? Because they like the challenge that comes along with it. Am I wrong? I mean, you tell me. Okay. Well, let's get into it. What are we going to do now? We're going to go to the watch list. So our context is we're still bullish. Our context is that we feel like this market is in a potential consolidation that could be ready to bounce. And I want to be ready for it if it does. We already went through a couple of the trades that came out as alerts. XLE, that trade's doing well. It's profitable. FAST, it's minimal, but it's working, right? I mean, it's working minimally when a lot of what the market's done in the last few days has not worked at all. So, well, we can live with that, right? Well, let's get to the watch list. What are we going to do now? So first and foremost, this will help you to get a sense of what's on the watch list and why. So Apple always will be on my watch list. Always. Because it's just such a big piece of the market. We have to watch Apple. I would say Apple looks tradable up here. And then I have this. So on Thursday, it's going to release earnings. And that's scary. Now, the last time it released earnings, you can see it gapped up. It had some good AI news, and boom, we went for a run. But it's all the market when we get to earnings is going to say, what have you done for me lately, right? It doesn't matter what it was. Doesn't even matter what it was last quarter. It's going to matter mostly what they say is him ready to is it ready to go, right? Is the market ready to turn? Sorry, I have to pull Discord back and forth. Not that. Oh, you're not seeing it? Wait a second. Let's try again. Let me reshare. Screen. Okay. How about now? There it is. Apple. David or Steven, you said no? Okay, if you're not seeing it, you might need to go into the speakers area and click on the screen button in order to pop it up. And then you have the ability to pop that out and maximize it. So you should be able to make what my screen is now maximized on your screen. What do I like about Apple? I like the trend. I like we just had a higher high. We're making a higher low. I don't like the earnings. So for me, it's a pass. Amazon. Amazon is still in this consolidation is literally, it opened above and it's right back in it. Earnings are right here. There's nothing here yet. We're going to be patient. AXP, we said AXP, we had signals in financial starting last week, right? And now it's moving. That's one financial. Then there's this financial. Bank of America. Steven can tell you what a nice Bank of America trade can do if you catch it right and ride it. Yeah? And so, is this ready to go again? It's set up. The stochastics down there is starting to trigger. Honestly, all I'm waiting for is a little bit of price action. So there's a very good chance this is a morning trade alert based on the work that we do here today. If we start to build this, let's keep looking though. BLDR, you can see popped and is kind of holding a little bit. Citigroup, Citi turned, I would say Friday, pulled back yesterday, back moving again today. Citi's viable. Caterpillar's having a hiccup. I liked Caterpillar. I actually ended up going with Fastenal. I'm trying to remember what, I was very close. Like I was building the trade on Cat and then I'm like, I'm trying to remember what gave me that, Can't remember now. Something. Son of a gun, I should have wrote it down. Fastenal, though, turned out to be the right horse, at least for the time being. CCL down here. This is Carnival Cruise. It looks pretty iffy to me. Maybe. Colgate Palmolive had a nice little pop. Now it seems like it may go into a pullback. Okay, so you might be wondering, Scott, does that equal a break of the consolidation? Nope. I need 2 more of those so that it gets up to here, bing, bing. And then that's the go. For now, not yet. ConocoPhillips kind of died. XLE was a much better choice, and now we're coming into earnings. I'm probably going to actually bounce it because it just really kind of looks like trash. We'll keep trading XLE if we trade anything in there. Costco is down. I love watching Costco. I don't bounce Costco. I always watch Costco. I was at Costco today. But I need this before I do anything. Over and over, that pattern. Now, once things are in that bigger scale consolidation, they are labeled persona non grata. It's a technical term. Excommunicado. You're out until you pay penance. CSX, that had a nice little turn. Industrials. Carvana, like Carnival Cruise. Consumer discretionary had more of a blip, which is okay because our focus was more on industrials and financials. Fastenal is one that we did. Still looking for more momentum. Gold looks like it could be bouncing. If you like gold, still coming out of this turn. Looks reasonable. GM still waiting. Google, nothing. Where's the consolidation? It's got to bust it, not get to it. Bust it. Home Depot looks fine. Small caps are holding up. Home builders are holding up. Coca-Cola. Yeah. Anyone trade that second move? I mean, it was kind of like midstream pushed by earnings. Let me see what my chat says. Hold on. A butterfly on BAC up $1. Need the bounce. Okay. Meta. Nothing here for us yet. MMM. Big surge on earnings from 3M. Morgan Stanley. I would say Morgan is there. I like Bank of America better. As of now, Bank of America is the one I'm going to go look at. Still in consolidation here. Still in consolidation. They got beat up, man. 7% today. Now I think it's overreacting, but we don't look to move until we're done overreacting, right? JP Morgan, did I say I don't like it or do I not have it? Looks like I don't have it. Let's take a look. I'm open to any financial, to be fair. Yeah, I like it a lot. I think it looks great. Looks great 2 days ago, just like Citi did, right? So, yeah, let's put it on the list. Looks fantastic. Financials is a strong place right now. I want to be trading where strength is. PLTR. Yeah. Remember what we said? Where we're like, we don't want to trade. We don't want to be the best house in a neighborhood that's starting to burn. Because we just can't be all that sure that the fire is not going to spread all the way over to where we are. Right? QQQ in consolidation. Excommunicado. SPY is as well. TJX. Actually, that looks buyable to me. Let me move this over real quickly. I want to check something here. So I would say so far TJX. TJX. That's a maybe for me. And BAC is close. Close. What else? TSM, no. Consolidation. Okay, we'll see what the dollar does. It's a little concerning. Walmart. Ooh, Walmart looks close. I'd trade Walmart. I would trade it all the way down to here. I don't care. Bouncing off that 50 for sure. Okay, so let's go look at Bank of America. I would say Bank of America and what was the other one? Bank of America and now, what was it? TJX. Thank you. TJX. TJX. Yes, TJX. Let's go here. Okay, so let's go into the Analyze tab. And we're going to start setting this trade up. This is for BAC. Now, again, it's going to look different because it's not a trigger yet. So we have to recognize that whatever work we do now is preliminary and that it's going to have to be adjusted by the time we actually get a trigger. This is not a, oh, what you said. No. Preliminary. What is this? Preliminary. One more time. Preliminary. Okay. So preliminarily, what are we thinking? Let's get that chart back up. BAC. Okay. So we'll call that support. I mean, I would probably want to be in by here. And if that's the case, I would probably actually, no, let's see. Maybe by there. Somewhere in there is my entry. And there, whoops, there's my stop. So that would be, now, I'm not entering anticipatory right now. If this were a market that we were a 6 or a 5, and I had this where it's sitting on support with that stochastic starting to turn, I would anticipate. I'd be like, yeah, let's give it a shot. Let's take it. See how it does. Right? But with the market having eased up a little bit, I am now going to say I want confirmation. So confirmation is going to be when this thing turns up here. So let's say 41.90. 41.90 with a stop loss at the low here is 40.81. Let's go 40.41. And we said we're going to get in. If I could close in. Yeah, I can close in. For a second here. So 41, we're going to call it 41.85. So I'm looking at about $1.45 of risk. Let's see what we're thinking is on the table here. Now I got to go back a little bit. And I would say there's a take profit target. I would say right up here, we'll call it 44.15. But if we get a new high, let's say 46.50. Let's go 46.50 here. Let's go. We're going to add another. Oops, that's too many. We're going to do, I just went over here and added a slice, and I'm going to set this slice to 44.15. Why 44.15? Because it's this. Actually, I'm going to just, yeah, 44.15, this old high. Preliminary target. What do we have now? I have a stop. I have a target. I'm going to reorder these. Let me show you some cool things here. I'm going to reorder. So now it's stop, entry first, and then ultimate. The other thing I can do here is I can come in and I can set these slices like this. And now you can see my trade. Entry, stop, first target, ultimate target. That's the trade. Now, you can see that we're looking for some momentum. It's going to be tough. But I want to try to push it if I can for how this trade works. So I have all of these variables now. And now I can come in here and start playing around with what a trade might look like. Let's start with the stock. I just came up to this ask price right here and I clicked on it, and you'll notice what it did was it came down and gave me a buy order, buy 100 shares. Right? Buy 100 shares. Now, if I buy 100 shares, it says I'm already making $57 because I'm not buying it till 41.85. So I need to adjust this to 41.85. And now you can kind of get a sense. If we stopped out with 100 shares, we'd lose about $150. Okay, that's pretty reasonable. If I get to my first target, I make 230. That's about 1.5 to 1. That's actually pretty good. That's pretty good for a reward to risk on a take profit target. What is the ultimate target? The ultimate target is at 46.50, and I can make $465. That's 3 to 1 on my reward to risk. 3 to 1. So yeah, is there a good chance that's how this trade comes out tomorrow morning? Yes. Now, I have a delta of 100. I have 100 shares. What else could I do with this? Let's start talking about how would we... This is... No. There's no implied volatility because we haven't done anything with options yet, right? So far, all I've done is I've started to construct a stock trade, right? I have 100 shares of stock, so a delta of 100. I have a stop, entry, primary, or a take profit, and a target. And this is saying, what if I buy 100 shares? But now I'm saying, well, what if I want to do an option trade? So the first thing I'm going to do is I'm going to say, well, what's my implied volatility? Okay, so this is all hypothetical. Yes. All simulated for now. We're just playing in the options pricing model. Very sophisticated options pricing model, by the way. Now, what's my implied volatility? Well, low is over here when it was 20. But high was back here when it was 29.7 or 30ish. And right now we're at 25.6. A little above the middle. If this were a volatility index, which is basically where you put the score on a 0 to 100, with 0 being the lowest, this is how an implied volatility index works. This right here is 0, and this right here is 100. So then we would say, oh, well, the very middle of that is right here. So that's 50. Where are we now? 55%? That's probably where I'd put it. What does that mean to me? It means it's not low. In fact, for this stock, you only had this like 2-week window where the options were cheap. Right? That's where they were cheap. Everywhere else, they've been more expensive. Where they are now, more expensive. Okay, so now what? So now we're saying, if I'm going to do an options trade, what kind of trade do I want to do? And this is where I might be like, you know what? I might look to do a spread of some kind. Hedge it a little bit. So now this is where it is going to get a little more advanced. So if you're a beginner, you can stop right here. You have a whole trade in front of you that you could paper trade. Stop, first target, second. Now, if I got to the first, what would I do? Maybe 25 of my 100 shares. Sell 25, keep the other 75, and try to get 3 to 1 on a bigger piece of the trade. That sounds reasonable. That sounds more attractive. Yeah. Okay. Let's do an option. I've got 17 days. Let's see what we think about a bull call spread for 17 days. Current IV is 34. Well, that's for the August 2s. That's only for 3 days out. Right? That's 3 days out, 34%. Then if you go to the August 9s, it's 28%. If you go to the August 16s, it's 27. So the average implied volatility, they would probably actually put it at more like, I don't know, 20, something else, less than that. right? And so when you look at the chart, the chart is actually showing showing it at 26. The chart is showing you average implied volatility. These are showing you the actual implied volatility numbers for each of these different options. The formula is doing more of a composite perspective, doing some multiplication. So you were looking at 6th of September too, so that'll change it as well, right? Well, that one actually looks like it's at 24 here. What did you say it was? 34? Okay. Okay. Let's see this spread. Now, if I buy the stock and I'm wrong, I'm going to lose $150. So let's just standardize that. That means I should only do 5 contracts. Because if I do 5 contracts and I'm wrong, I'm going to lose $155. If I'm right, I'm going to make, $350 to $420. So it's very similar to what the stock trade would be, but it's cheaper. Also, it's going to make money from time. So if I stay in this trade, I will actually make $450 if I stay in the trade a little bit longer. So, yeah, I would say that's a reasonable alternative to the stock. They behave similarly. So what's the difference? Well, if I buy the stock and I buy 100 shares, it's going to cost me $4,200. $4,200. If I buy on margin, it's going to cost half that, $2,100. And then if I buy this bull call spread that behaves very similarly, the risk is the same, 150. The reward is close to the same. I make a little less at the primary at the full target, but I make a little more along the way. There's a little more cushion on this. So I would for this trade, 5 contracts at $114 a contract. So $570. So you'll notice that what the options did, I'm basically trying to build the same trade. I'm trying to have 150 risk, 450 reward. But as I move through these strategies and I move from a stock at 4,200 to a stock on margin, which is 2,100, to a bull call spread, which is 570, you can see it's making better use of my capital. Overall, if I'm wrong, I don't expect to lose more than $150, right? So, yeah, thoughts, questions, concerns. There's a very good chance that I'm going to actually put this out as a stock trade and as a stock trade and a options trade in the morning. Why not have both, right? Absolutely. Give me your thoughts. Does anybody have any questions? 171.79. What is that number showing? 171.79. Why am I not seeing that number? Is there under a column that it's under? What column is that under? 171 under Delta. There you go. I see it now. This is the position Delta. What that's telling me is essentially what this number would be if I were to take the date back to today. Bing. Oh no. Yeah, they're close. I'm not sure why it's giving that difference right there, actually. That's the delta of the position. So you can see the first one where we buy 100 shares. What is the delta of the short arm? Let's see. So I bought the 40, sold the 42. I bought the 57, I sold the 24. So yeah, I sold about a 24% probability, right? Is what that means, essentially. Intermediate class, getting their trade details in order. I love it. So, is this ready? It's set up, but it's not triggered. Remember that we're waiting for the buyers to come in and get this up to a certain level, 41.85. It's only at 41.28 right now, right? This is over my head. Okay, let's go single leg. Boom, let's do a single leg. What is this? Why is that in there? I don't know what the hell that was. Let's go for a single leg. I'd probably go further out in time. I don't want delta or theta to eat me up. So maybe I'd go out to the August 30 days. And now I'm going to buy an option. One single option. Would you set an entry for the spread as you would on a stock trade? You can. And yes, I would. So you can do a conditional order that says, if BAC goes at or above 41.85, buy this spread. Now, I would only do that with extremely good liquidity, but we do have extremely good liquidity in BAC. Although these don't look great right here for some reason. Maybe let's go out to the Septembers are much better. Let's go out here to September. And let's just buy, I'm going to go, now if you look at this $40 strike, 28,000 contracts of open interest, 28,000. Right now it looks like it's 15 cents of spread, but I guarantee you it's going to be 2 to 3 cents spread. So let's pull this one up. Okay. Now, first things first, we don't want to lose more than about $150, so I can only do like 2 of these. At 2 of these, I'm risking about $123, but remember, we also have to account for time. So if we said, let's give it 10 days, there's your $150. So right now, whether we buy stock at 100 shares, buy a bull call with 5 contracts, or buy 2 long calls, we've established a consistency in our position sizing and our risk management. Our risk is around $150. Now, you'll notice this one is killing. Look at the reward to risk ratio. If it gets to 46.50, this thing's going to make $850, which is substantially higher than the other trades. I'll be honest with you. I'm leaning towards this one as well. Why? Reward to risk. I was looking at the spread. Why? Because the implied volatility was not low, but overall 27% is not very high either. So, looking at this one, you can see there's a few different ways that we could go, but that gives me the best reward to risk ratio by a far, far cry. Even if it took a little longer, took 5 extra days. If it gets to that first target, I'm making $400. That's almost as much as the other second target. If it gets to the second target, I'm making over $800. So this one gives me a very strong reward to risk ratio. Wow. Okay. So what did we do? We took the stock. We identified all our levels: stop, target, time frame. We talked about where would the entry trigger be. We talked about where is a take profit level. We talked about how would I do the stock, how would I do an option, how would I do a spread trade. What am I leaning towards? If I don't know any options, I'm going to do the stock. If I'm going to do some options, I would probably lean towards the long call. Now, what's the cost? Remember that 5 contracts of the spread was around 570. 2 contracts of this spread puts us around 480. So it's also the cheapest from a cost-wise. Now that means with an options trade, we can't lose more than we put into the trade, but we can lose everything that we put into the trade. That one has the least amount in the trade. Woo! We covered a lot of ground today. What are your thoughts? I'm sure for some of you, you're like, yeah, this is a little over my head. Don't worry about it. We've all been there. There have been so many times where I'm in a trading presentation early on and I'm like, this is over my head. It's good. It's why no stops? Well, now there is a stop. The stop is at 40.41, right? That's this one here. That's the if I'm wrong level. Now, whether you make that a hard stop, a conditional stop, a mental stop with an alert, everyone trades a little differently that way. But the only way, Dan, that we can have an ability to quantify our risk is if we know where we're wrong. If I don't know where I'm wrong, how do I possibly know how much I stand to lose? So we will always draw a line in the sand, and that line in the sand is, our sanity check to some extent. So, yeah, I would say that I'm probably going to put this out tomorrow morning prior to starting the webinar, and then we'll see if it fills. If we get filled on it tomorrow. So this will be a fun one to watch. If you're not live trading, at least do it on paper, right? At least do it on paper. Is there a video explaining what we just went over? Yes, like what we just went over for the stocks. Everything we just did here is in the stocks classes. I would go watch the long option class, and I would go watch the spread class, and both of these will make more sense. Options is a whole new world. A whole new world. I'm going to go find, I haven't looked lately. There used to be a couple of really good resources that you could do some self-service education. The OCC, the Options Clearing Course, had a good one, and the SIBO, Chicago Board of Options, but they both started charging for theirs. So, will I share this video? Both of these videos will be posted. Where will they be posted, you might ask? Well, let me show you. I was having a really clever moment, and I said, what if we had a place that we could put our recordings? And now what? Now there's a voice channel for just recordings, and I'm going to post them there. I don't email the foundation's recordings. I only post those. The 4 main, the Sunday, Monday, Wednesday, Friday, those will get emailed. The Tuesday, Thursday, we don't email them. We just post the recordings on Discord. So you can go back and watch them there. Is there a video on the analyze button? Oh, you can go into YouTube and you can actually be like, Thinkorswim Analyze, and you can play with that a little bit. We don't have any specific to that, but we use the analyze button all the time. All the time we come into the analyze, for sure. Do I routinely put a stop on the bull call or roll them if trouble? What about a stop on a long call? Yeah, I typically will have some sort of a mechanism to close the trade. Not always hard stops. If nothing else, I'll at least trigger like an alert that makes me come look. Then I'll watch the close, and if it closes like it's going to stay down, that was what I did with XLE, right? It was just like, hey, but by the time I got to the end of the day, it's like, oh, we're okay here. Didn't need to do anything. So that's what I would be looking for there. Man, woo, that was an amazing set of questions, you guys. What a blast tonight was. I had an absolute amazing time. And I will tell you that every trade that we've put on in the group or on the alerts I've taken, I love them. This is exactly what we should be doing. All right, I got to run. It's good to see you guys. Go get some sleep, and I'll see you in the morning. We're going to pick back up at pick back up 15 minutes before the market opens, 9:15. We'll catch the futures. We'll see what they look like, and then we'll just kind of prep this and see how this trade looks like it's going to go. It's amazing. Love it, man. So much good energy. All of you. This is where we'll meet again, PJ. You know it. You guys are bringing such amazing energy. I love it so much. So thank you. Have a great night. I'll see you in the morning. As always, happy trading.